So we got 5 months left for all of us, whatever your goals were, whether you're already hitting them, whether you're not on pace to hit them, we all have 5 months to reassess what the rest of our year should look like as far as what we could get done for the next 5 months. For me, I know what that is. It's 1, doing the best that I could, and 2, still shooting for my, original target, which for me as a business owner is to get 3 more licensed loan officers in here by the end of the year. That's my main thing. Thank God for the deals. It's not like we're swimming in deals, but given what's going on, we're happy with the amount of deals. At least I'm happy with the amount of deals that we're doing, but we could always do more, and that's the purpose of why we do stuff like this as well. So 5 months remaining, and interest rates are currently at, they're the highest they've been since rates have gone up right now. Like literally right now, they're the highest they've been all year. We have rates averaging at around 7.25% to 7.5%. That is for a conventional loan, okay? An FHA loan, rates will be down to like 6.25%, 6.5%. And in some cases, even for a great credit score buyer, some cases FHA ends up being the better deal right now because of just how the rates are working. And we'll obviously let you and that buyer know when we're in those situations where someone might want to be doing a conventional loan because they have great credit. When we see they're getting a better deal with FHA, we bring it up like, hey, this is out of the ordinary, but you're saving another $100 a month if we do FHA. Saving another, and one deal me and Laurel did, the borrower was saving $300 because of FHA. And that was a 5% down borrower, $300 a month better because FHA, because it was a high loan amount, 1% lower interest rate on FHA. It's a big deal. Right now, conventional rates are just that much higher than an FHA deal. So it's something for us to be aware of when we're doing it. And again, we'll always let you know when that is the case. So that's the interest rate environment. If you guys want to add anything with your experience with rates, how that may be affecting you guys, any buyers, et cetera, your take on what's going on with rates and how that's affecting the game right now.
I mean, when you bring that up as far as FHA versus conventional, I've really only been seeing approvals for FHA, honestly. I was kind of wondering that, but like, that does make sense what you said.
I say that affect the condition of property that buyers are getting, because usually a buyer was spending $1,000 to $1,200 a month. They was getting a property that was fully renovated. Now they're in that 150 price point, so they can't get a home. Something in the home not going to be updated if it's in Macomb County or Oakland County.
Yeah.
That's one thing I definitely noticed. You have to spend probably, I would say, above $1,500 a month to have a home that's fully renovated. Probably about a price point of 170 to 180.
Yep. Anything else you guys want to add?
I'm noticing just a lot of buyers rather get down payment assistance any way they can, any way they just want that down payment assistance more than anything.
Mm-hmm. Understood. We're going to talk about a 1% down conventional program near the end that make sure we don't forget. I'm not going to forget, but if we miss it, I want to talk about that. So, yes, the other thing I like to say about rates is that is one of the reasons why we have a supply and demand issue. We have so many families sitting on 3% rates, some people 2% rates, where our job is not to convince them to go sell their home and buy when they're sitting on a 2% rate, because if that family says we're sitting tight, they're going to sit tight, especially if it's a family who's making, the average family, just making ends meet, not necessarily sitting in extra cash. They want to sit on their steal of a deal as long as their house is good enough for them. Hence why there's less sellers, hence why we have a supply and demand issue out there. So it's something to be aware of. When a lot of people are saying, trying to encourage a buyer who isn't a buyer to become a buyer when we're never going to be a buyer in the first place. Because a family already decided, we're sitting tight until rates come down to 5%. We're sitting tight until rates come down to 4%, if that even ever happens. Not because they're concerned about paying more, not because they're saying a 5% rate is too high, but the opposite, because they're sitting on a steal of a deal that'll never come back again. It's a factor that people are not paying attention to, that we need to all be aware of, so that when you're talking to a family, a buyer, if they currently already have a home, if they don't have a mortgage, it doesn't matter. If they have a mortgage, and it's a $200,000 mortgage, a $150,000 mortgage, a $500,000 mortgage, the person sitting on a 3% rate does not want to leave and go to a 7% or a 6% unless their family is truly ready to, meaning they're having their third or fourth kid. They're having their second kid. They want to switch school districts. They want to be closer, work. It's a family who's older, and now all the kids are married, and now the parents want to downsize. This house is too big. It doesn't matter if they have a low rate. They want to go to a smaller home. I encourage looking at the milestone, the families who are going through a milestone in their life where it doesn't matter what rates are, they have to move. They got to move. They got to go somewhere. And obviously, we all have friends who are getting married, getting engaged. Those are people I DM, or if I know them, I'm calling them, and I'm setting up a future follow-up. I'm setting up in my future pipeline right now. They might not be ready to buy right now, but within 3 months, 6 months, a year, they're buyers. Someone just got engaged. They're either going to go rent or they're going to go buy. Very few people are going to live with their family. You know, very few people are doing that these days. So that's my take on rates. As far as appraisals and home value, people have been waiting for values to drop because of the same stuff we've been talking about, supply and demand. I don't see home values dropping in any metro area in the country, like any suburbs of the country. I don't see values dropping because everyone is facing what we're facing here in Michigan, the supply and demand issue. So the people who are saying, I'm not going to buy until home values drop by $100,000, good luck. I don't know when that's going to happen. I don't think it's going to happen at all. If we do experience a drop, I think we experience 15%. You know, 15% on 100,000 is 15,000. 15% on 200,000 is 30,000. I don't think we're going to see anything crazy. That when someone is doing a mortgage, that $30,000 drop, it doesn't really change their deal. It's negligible. It pretty much doesn't matter. It's like $10 a month on their mortgage payment, $15, $20 at max. So, excuse me, actually I want to correct that. It's $60 for every $10,000 in mortgage. So if we have a $30,000 drop, you're talking about $180. $180 is not going to be the difference between someone saying I'm a buyer versus not being a buyer. I'm going to buy a home over $180 a month. I don't think that's happening. It might change how much they get, but it's not making a person say I'm going to not be a buyer to being a buyer now because I can save $200 a month.
So you're basically saying if you got the purchase price now, $30,000, you're going to change it from
$180. That's it. And so if people are waiting for prices to drop, that shouldn't be their reason. You know, if we educate them on, hey, let's assume prices drop. What do we assume, 15, 20%? That $30,000 right there in a $200,000 home is $180 a month. And all of this is relative in scale. So if you're talking to a buyer that may be looking at a $500,000 home, yeah, it's going to be, you know, closer to $500 a month if we're talking about like a $60,000 drop. But that $180 a month is just like the $500 a month is just like the $200 a month to the person who is buying a $200,000 home. So for them, it's not going to make the difference either. Point I'm making with this is people shouldn't be waiting for prices to drop because one, I don't think it's going to happen, and if it does, it's not going to save you much. Two, our job's to find who is the real buyer. If that person is not on the fence, they're not truly a buyer, and it's not because of these reasons we're talking about, leave them be. Move on to the next client. They weren't going to be a buyer in the first place. They were never going to move. I try to focus on who is going through the position in life, and if the only thing that's holding them up is home values, we can educate them, and maybe they jump over the fence now. Maybe they're like, you know what, this makes sense. I was saying home prices will drop by 15, 20%, and he just showed me he's going to only save me $200 a month. Let me go get the house I looked at, and I liked it. Let me just go get it right now instead of waiting to see if I get a better deal, and it may not be available a year from today. The same type of home may not be available a year from today. So that's my take on appraisals and home values. And one more thing, and then I'll open it up to you guys with that. Home values, if anything, have continued to increase this year. So because we're not having as crazy of offers as 2021, and even throughout summer of 2022, people are making more reasonable offers, and therefore the home values are coming a little bit higher than the accepted price. Almost every deal we have right now, values coming in about 5, 10, 15,000 higher than the purchase price. And we're going back, say, hey, normally we wouldn't tell the seller value came in higher, but what we're doing is, hey, value came in a little bit higher. We want to make the purchase price $200 instead of $195. Give us back the $5,000 as seller credit. My buyer just saved $5,000 at closing at a cost of pretty much $15 a month, saving $5,000 at closing. It's a way to bridge, if I was going to bring $20,000 to close, now I'm bringing $15,000 to close. It's a way to bridge the gap and save your client some money, save the buyer some money. Something we'll only offer once the value comes in higher, but that is what's actually happening. So that's my take on what's happening with appraisals and home values, what we're seeing. Feel free, chime in. What are you guys seeing? You guys seeing something the same, something different?
I think this market is the same as almost 2021.
Mm-hmm.
I would say, because every listing, if you come in right
Yeah.
So you probably won't convince people to offer over asking price, but you definitely will tell them like, hey, to make this offer asking, I'm gonna keep following up. And if the seller's not responding or the listing agents, you gotta keep following up or tell your buyer we're gonna have to increase.
Yeah.
I agree with you there.
Yep.
I think the values are gonna keep. I don't think we way far from the market crash. It's gonna have to be something that happens outside of real estate to make real estate crash.
Maybe I had something more big deal globally. I agree. I just don't see, and even if that happens, there's enough qualified families out there looking for homes that there's still a supply and demand issue. So even if that does happen, 15% correction, 20% correction, I don't see 2008. I don't see 2008 happening, personally. I don't see that happening with the mortgage, with people foreclosing. People are going to foreclose, but the truth is today, people actually qualify for their mortgages. When then, they were just getting loans when they weren't supposed to. They were just handing out loans. Today, families actually qualify for their loans. So yeah, there's going to be a foreclosure factor as things get harder, but not like 2008 when people are trying to compare it to that. No, like people had homes that they shouldn't have had in the first place.
I had a question about that. I had a situation happen today. I had a client, they bought a house in 2019. They missed, I believe, like 6 months worth of payments. They got something called a partial claim. Basically, like the second mortgage pulled out to cover their payment. Do you know anything about that?
A partial claim on,
So it was FHA. They bought it FHA. They bought it FHA. She told me she missed about like 6 months worth of payment.
yeah. So this was your seller. You were selling the home. Yeah.
Myself.
Partial claim, I don't know, but it has to do with foreclosure.
It stopped them basically from going to foreclosure. The way I got explained to me by
Yeah.
the loan officer, they basically told me they pulled that amount, put it on the back end of the loan to help them get out of foreclosure.
They did a loan modification. They did a loan modification. Yeah, it was very common. They were very common from 2008 all the way through like 2013. Like people modifying their current loans without necessarily refinancing. They're changing their 30-year loans to 40-year loans on the same mortgage, just extending it. And there's some people still in that same mortgage. They just never got out of it. With that being said, no, that has to do with they went 3 months late. Foreclosure could start happening. And instead of foreclosing, the bank said, we're going to modify your loan so that we can help you make ends meet. And they kept the home. But when you're selling the home now, and this is what I'm assuming you ran into, correct me if I'm wrong, the seller thought they were going to make more money because they thought they only owed this, but there was another 40 G's or whatever on the back end, and they're like, whoa, and I can't come up with the difference.
That's what happened.
Yeah, it's very common. I don't see that with loans since like 2015 on new loans, even though during Corona there was stuff like that going on. I haven't really come across it yet. But if someone has a mortgage that they have not refied or sold their home, and it was from the period of 2008, 2012, you're gonna run into that. It's gonna be very rare though, because so many people refinanced during these record low rates for the last 3 years before the rates went up. Even people who had the loan modification, even if they had a 40-year loan, they refinanced to a 30-year loan and took a 3% rate instead of their 5 or 6 or whatever rate they had. So I think it's a very rare scenario you ran into. Anything else before I go to the next?
What topic we were on? Just appraisal and home values?
Yep.
I got a question. I'll probably save it for later. I just want to pick, like, I know our conversation on the phone, targeting a higher price clientele, like some tactics you think that realtors can use.
Yeah. So let's go straight to it. So if we go down a little bit to near the bottom, the winning target and demographics for 2023. So whether you're selling a $100,000 home or helping a buyer buy a $100,000 home, or you're helping them buy a $400,000 home, the amount of work it takes from you, is it the same or is it more or is it less?
Same.
It's the same. It's absolutely the same. I would argue it's easier when you have a client who's able to afford a $400,000 home. Why? They don't require down payment assistance for the most part because they're buying a $400,000 home. Okay, otherwise they would be looking at something less. 2, odds are it's going to be easier to qualify them because they're buying a $400,000 home. It's not always the case. I'm just giving the odds, right? Odds are they're going to be more qualified, so it's even easier for us to get the deal done. Odds are they're going to be maybe they're not willing because everyone wants to get a better deal, but they're going to have the means to make a more competitive offer. They're more likely to have the means to make a more competitive offer. So not only are you going to get more money for the same amount of work, and I would argue maybe a little bit less work, okay? But it's going to be easier to get done because the type of offer that you know you got to make to win it, you're more likely to be able to convince the buyer who's buying a $400,000 home to make that more competitive offer, to turn it into a win, a success story, where everyone leaves knowing that you got that family into that home. The family knows you got them into the home, turns into a referral, and their friends and family are probably going to want to buy another $400,000-ish, 200, 300 home. It just keeps breeding more of the deals that are going to make you more money. Versus, or now let's use the $100,000 example, harder to qualify, doesn't necessarily have the means to make the competitive offer. Even if we get them down payment assistance, they're still not going to make the more competitive offer. And we have more losses. Because they're not making the right type of offer, you're going to have more losing stories. And eventually either that person closes, cool, but it took more time, more effort, more offers, or they end up going to another realtor, another loan officer. Why? Because at some point when they're somewhere and someone's saying, oh, you've been shopping for a home for a year, how come you haven't closed on a home? Your name's going to come up. And that other realtor is just going to start shitting on you and say, I could do better. They're going to go to you. Why? And what's the buyer going to say? Yeah, I haven't closed in a year. Maybe it is my realtor. Maybe it is my loan officer. And we both lose the deal. It's done. But let's assume it just closes with all that. You make 1/4 the money on a 400,000, right? 100,000, just add it up. It's half the money compared to 200, 3 times at 300, or 4 times at 400, and so forth and so forth. So I would spend all my time focusing, I do spend my time focusing on $350,000 deals and above. Why do I say 350? For us, the way it works out, if it's a 350 deal, 365 to be exact, it's a $10,000 revenue to my company. And that's very valuable to me. I want 365 deals and above. I could offer better deals when I'm getting 10,000 revenue. I could, again, get more wins, more success, make more money at the end of the day. I could have more people. If I'm focusing on a bunch of $100,000 deals, I can't even have this office. It's very simple. It doesn't matter if I'm closing a ton of them. I can't even have this office. I'm not making enough money to do it. So it's not that we shouldn't do the less expensive deal. It's that I like to do the less expensive deal when it comes my way and it's someone I want to help. I don't go after them. I do not go after those deals at all because it's a waste of my time. It's a waste of my time. I like to reserve it for when I want to help that said person. It's my friend who wants to buy an investment property for $100,000, cool. It's my aunt wants to go live on her own and get an $80,000 home, no problem. But other than that, I really don't care. I don't go after it, you know? So that's why we should, to answer your question of how to target them, I think was your question. You know, for me, I use social media to start planting seeds. You know, so if I made a video and it's about like why you should get pre-approved and then why you should get pre-approved with my company. And then I have a friend who I know just got engaged, or even not my friend, a friend of a friend, because that's how social media works. You see all these, there's your sphere, and then you're seeing everybody's sphere, because that's just how social media works, right? Whether you see it, whether they're friends with them directly, or whether you're seeing their comments on a post, or whether it's Facebook, the way Facebook and LinkedIn works, it shows you everybody's sphere. It's just if they comment, their stuff pops up, you know? They just got engaged, congratulations, cool. On their public post, a DM. A DM. When I'm sliding into DMs on social media, it's not to go talk to girls. It's to get business. I'm sliding into DMs all day. So that's what I do. I plant the seed, and it doesn't mean I'm trying to make a deal happen right now, because you don't want to come off that way necessarily either. I'm planting the seed. Congratulations. This is what I do. You're obviously in your near future, 1, 2, 3 years, or maybe even right now, depending where you're at, however you want to word it, you're going to be in the market to buy a home or rent. And I like to go over what that looks like with you so that you and your husband, or you and your fiance, you and your wife could start planning now instead of later. And I want to be your point man. I want to be your professional that helps you get this done. And if you're lucky, they're trying to buy a house right then and there, and they might give you a shot. If we're more realistic, they're buying a home in a year, and this is a deal for the future pipeline. I organize I'm old school, I use Excel. I organize my Excel based off 1 year down, 6 months down, 2 years down. And then there's the ones that are right away. Anything that's like less than 6 months, I consider right away, you know? Because that's just how our industry works. You're lucky if you get a client now and you get them home in 1 month. It happens, but you can't depend on that. It happens when it happens. It happens because you're working so much and it just happens. So that's one way that I do it. And then the other thing is going to networking events, you know, like this, and just other business events. You know, for me, I look at weddings and parties and engagement parties as a business event. I love going to them. I get a deal almost every time. I say I get a deal every time I'm at a social event. It's not a business networking event. It's a wedding, but conversations happen. You're hyped. People ask, what do? You're having a good time. And as long as you actually have the right conversation and you remember to follow up, because people will tell you, people will start telling you, I'm looking for a home or we're going to be buying a home without you even asking, because you're just sitting there having a drink and having a conversation. You got to know that person's going on your follow-up, and you're following up with that person a week later, a month later, and then you turn it into every 3 months until it turns into something. You don't want to hound people down every week until they're actually hot and ready. But when someone's hot and ready, you do hunt them down. You do talk to them every week. Absolutely. You start figuring stuff out with them, you know? But if someone's not hot and ready, why would you call them every day? You're just going to bother them. Why would you call them every week? You just might still bother them. Once a month, it's not a problem. Once a quarter, definitely not a problem. Nobody should know. If someone complains to me, if Laurel knows, if her family complains to her because she followed up with them once a quarter or once every 6 months, don't take it as a real complaint. It is what it is. Like, they're really not complaining. It is what it is. It's not a true complaint. They're usually going to be like, wow, this guy's professional. He followed up with me. He remembered the conversation we had at the wedding. I thought we were both rocked. He remembered what I said. And I wanted to buy a home. Boom. So those are natural strategies that I personally employ. But the social media one is, I don't want to say it's easy, but it's easy access. It's easy access. You don't got to be at the party. You don't got to be at the event when it's on social media, even though you should be doing both. Social media gives you the access whether you're there or not, you know? So now, going back to when I said the video, I made a video about why this, why that. When you did go plant a seed in a DM or in person, and that person goes to look you up, there's a video that's selling for you when you're not selling. It's you selling for you when you're not selling, talking about why I need I'm speaking in loan officer terms, obviously. Why I need a pre-approval, why I need to work with me, and now they're seeing why they need to work with this mortgage guy instead of another mortgage guy. On your end, why it's important to get pre-approved ahead of time, or what services you offer as a real estate agent, you know, what steps you should start thinking about. You're not necessarily asking them for a deal in your video. You're telling them, you're giving them education, because someone who is going to be buying needs this. They start looking up this stuff. So once you planted the seed and you have that video already there ready to go, it's pinned to the top of your profile, and you recycle that video every, you know, your different topics, you recycle them every year. You know, make a new version, because now it's a new year, right? Recycle them. You got yourself selling for you. And it's a way to get business, but you have to actually pay attention and keep your eyes and ears open for the more expensive deals and go after them professionally, you know? Otherwise, they're not gonna land on your lap. They're not gonna land on your lap. I will say one thing, and then I'll let Laurel or Deanna say something too. Deals do land on my lap. People tell me, like, oh, Terry, but you see, it's easy for you, you know, I just saw you get a deal out of nowhere. You know, I'm new. It's not like that for me. And I say, the only reason a deal lands on my lap is because every single day, at minimum every other day, I'm doing the stuff I'm talking about. And if I stop doing that for 6 months, no more deals are ever going to land on my lap, because my voice stops being out there. My videos stop being out there. I'm no longer at parties talking about what I do. Again, I'm not out there talking about what I do. People ask you what you do, and then it turns into a conversation. So yeah, a deal does land on your lap, but only when you're putting all the energy out there. That's when a deal will land on your lap. When you start and you're not doing nothing, a deal's not gonna land on your lap. If guy 14 years, stopped doing stuff for 6 months or 1 year, no more deals land on my lap. It's just how it works. So you gotta put it out there. You're gonna have all your realistic deals, and then you get a bonus deal that lands in your lap. You can't depend on those deals though. I look at it as a bonus. Put all the work out there, you're getting your real deals, and then boom, you got a bonus deal on your lap. Cool. Don't think you don't gotta continue to do all this other stuff. You still got to do all this other stuff that got you that bonus deal in the first place. Otherwise, the bonus deals stop. So that's that. Laurel, you want to comment on that?
Just to piggyback on what you said, I feel like just staying in front of everyone's face is like, you're hard to forget, you know? It's not, I wouldn't say like bothering bothered by it, but I look at it as like I'm always there. They can't forget me, you know? So it's the main thing.
Deanna?
Same thing, I always like make sure, you know, they all know what I'm doing. If listen, if we get together, like, and I see new faces and all that, I make sure that if I don't go up to them and tell them, somebody else that I know in my group that will tell them, hey, she does this and that. So I just make sure that everybody that I know, or everybody that knows me, they tell the people that they know that what I do too. And that's how I mostly get my business. I don't mostly, as of right now, I'm not really promoting out there, like I'm not doing any social media, but mostly it's like, with our culture, we have a lot of weddings. Every weekend, we have like 2 to 3 weddings. a weekend.
There's something going on every week.
Yeah,
Every.
weekend. So, and then a minimum of 400 or 500 people.
Yeah, if it's a baptism, you got 30 people there. If it's a engagement party, you got 80 people there. If it's a wedding, you got 300 people there. And there's something going on every week, you know? So that's that. But at the same time, we have so many people in our culture doing the same type of work. So it's all relative. It's still like 10 people I have access to at the end of the day, because at that same wedding, there's 10 other loan officers and 10 other realtors, you know? So it still works the same way though, at the end of the day. So that's my advice. Obviously, you could do cold calls and leads. That's always a thing. But you just gotta know what comes with that. It comes with high rejection rates, high all of that, high flakeability, meaning you might think you have a client and it's, you know, and then they flake out. That's fine. That comes with cold calls. But I only suggest doing cold calls if you're gonna do it literally 3-4 days a week at the same time every day. Otherwise don't do it. Because if you're not on a schedule of doing it, the leads just, they fall apart. It requires that level of attention. I don't do it anymore. I trained off of leads myself. From 2009 till 2012, it was all leads. So it's a good thing if you got the stomach for it. If you don't, if you're gonna build the stomach for it. Otherwise, you know, that's up to you if you're gonna do that. But I'm always gonna train on and teach on what I just talked about, how I get business.
I was about to say, I kind of agree with you about that. That's been the biggest thing with me and Jay. Like, you've been trying to do cold call, and we want to do it, but it's like that point where you're just running around so much, doing so much. Everywhere I go, my card is somewhere. My card is somewhere wherever I leave. And so I've just been really building off of that, and then the relationships I built. I've been referral, I think the last 4 deals, probably been some type of referral, no matter where it came from. So that was I'm happy you brought that up, because it made me kind of feel a little bit better about not calling. It's like, okay, if I'm putting my face out there some way or bringing my voice somewhere, some business is coming to me.
Yeah, I'm gonna challenge you a little bit on that. I'm happy I made you feel better, but I'm gonna challenge you a little bit on that. How many deals, if you don't mind sharing, how many deals have you done so far in general?
I'm at 18 a month.
Beautiful. What I'm about to say might not matter then. What I like for leads is it gets you in front of people you don't know. You could start testing everything you want out. You can say whatever you want. You're not gonna say necessarily whatever you want to your cousin or to someone you know, but you can start testing stuff out and you can see what works. One, if you're still, you know, getting your feet wet, you can make mistakes. And it's not someone so close to you where it's gonna like hurt you here that you made a mistake, you know? Not that it's right to make a mistake with other people, but it's not close to home for you. It's not gonna have that sort of mental effect to hold you back on what you might have otherwise would have been willing to try out to see what you could get done. So leads are great for training. It's great for learning how to solve rebuttals. It's great for experience so that when you are going after the people that you know, the people in your sphere, people that are in your community, you're more experienced and you're more likely to do a better job for them. So there's still a value to it at the end of the day. I don't do it, but I used to. I built off of it. It's 3 years straight. And that's when I said I haven't done leads for myself since 2013, 2012. Even with that being said, I still do it every once in a while when I'm training people or there's someone new. I do it to show how it's done because we do buy leads for training. That's how I use it, you know? And I will say this as well, once rates do drop, whenever that, a year from today, 3 years from today, I'm gonna have 4 people sitting right here, 8 people maybe, cold calling. I'm gonna be buying leads and I'll have a bunch of young people in here calling leads. It is what it is. There's nothing wrong with it, but there's 2 angles to the business. There is pure networking, there is pure leads. And then usually people fall into one camp, but almost everyone that learns how to do networking, they get their feet wet with leads. Almost everybody. So I'm not saying you need to, but don't shy away from it if you're trying to build up more experience. If you're doing 2 deals a month on your own, let's say right now from networking, what's wrong with plus 2 deals a month from leads? You're doing 4 deals a month now. What's wrong with that? It's, but keep in mind, as well, you want to target deals are going to be worth it. You're about to spend money on leads. You want to make sure that the lead demographic is giving you the 200,000, 300,000, 400,000 plus range. Because if you're spending money on leads and they're all 150 or less, considering how much money you're spending on it versus the revenue that comes in, it may not be worth it for you. You get what I'm saying? Something that's what I think about when I'm spending money on leads. So regardless, no matter how valuable the lead is, no matter how good somebody says a lead is, it's still a lead and it still has high flakeability. And how good you could keep them, there is a factor that's dependent on you. There's also a factor that's just that client was going to flake out. It is what it is. Sometimes it's luck of the draw, but it trains you up. It increases your pickup game, so to speak. It gets you able to be willing to talk, and to try stuff out and get stuff moving. So that's my take on that. Laurel, you were laughing for a second. Do you want to say something?
I was laughing because all this leads, you're like, it helps you train, this and that. I'm like, yeah, so for it. It gave me a lot of patience. I'll tell you that. That's all I was thinking.
All right, you guys are, we know each other because of Deanna. All right, Laurel, go ahead and tell the story. How did we get, I'll start it off. Yeah, I'll start it off. Laurel goes on cold call power hours, not from buying leads. She goes on social media. She searches people. She's trying to find her demographic, the type of deals that she wants, what people that look like she's going to provide, make her money, and she calls them. We got in touch, and then now you can continue.
Yeah, I had got in contact with the realtor in Georgia, and I just, so we cold called him. He's like on TikTok. He does like bigger houses. I'm like, for the shot. If he gets on Zoom with me, I can tell him what kind of programs we have to offer. So we ended up doing a couple deals together, and the first one had to do with Deanna. And I called her, and I see like a 586 area code. I'm like, I'm doing a deal in Atlanta, but I see her number. She's here. We ended up meeting her, and it was just through a mutual deal that was kind of crazy, but we closed it with her, and that's how it all worked out. From Georgia, the state of Georgia.
So she was the, what she does for you guys, I think, or for, right? Okay, she was that for this guy in Georgia. And that's how we got in touch. That's how we know her. So we're like, she lives here. We got to meet. Right? You live over here. But that realtor that she reached out to, why? Because she went on social media. I don't know if it was LinkedIn or was it something else?
I think TikTok.
TikTok. Okay, she went on social media. She saw a guy that looks like he's going to give her deals that are going to make this company $10,000, which means she's making money on that $10,000, right? That's what she was looking at. Then we closed that deal. We closed 3 deals with him. All of them were plus $10,000. We've generated $30,000 in revenue to this company because of that. Now, we didn't buy a lead, but guys, that was a cold call. That was cold calling. She went on a power hour, just went, and high rejection rate. She said her patience increased, high rejection rate.
There's sometimes I do it honestly almost every day, an hour. I'll try to call realtors, and most of the time, like I'll get a whole day where I just get rejected, and some days I get lucky. Like I've got very lucky with this.
I'm going to send you guys an email, which great job on that, because again, this is how we're talking here today. Is because of that. We wouldn't know Deanna otherwise. So I'm going to send you guys an email with, I have like a little bullet point breakdown. You're ranked, like think about your sphere as like a rank, there's rank 1 or rank A, B, C, rank 1, 2, 3, or whatever way you want to verbalize it, to have fun with it. There is the people in your immediate sphere, right? And then there's your friend, and then there's your friend's immediate sphere, and there's his friend, and there's his friend's immediate sphere. And then that's one whole set. And then there's another set of all the people that we just talked about. How many of them are business professionals? Meaning they have career jobs or they're making $70,000 a year or more. Why do I say that? Somebody's making $70,000 a year or more, odds are they're going to be buying at least a $200,000 house or more. Odds. Meaning you just doubled compared to where if you're working on a $100,000 deal. And then as that goes on, you're going to start seeing, because now you're working with these people or reaching out to them, you're going to start seeing their sphere. And okay, this guy's sphere, he has a whole network of people that all make $120,000 a year. Those guys are buying $400,000 homes, $500,000 homes, or it's the couple that they make $70,000 each. They're buying a $400,000 home, right? So this helps, and I'm gonna send you guys the list. You guys will see how I break it down. I haven't really forced it. We were doing it heavy right before Corona. Right before Corona, we did like 17, 18, 20 deals a month, like 3 months in a row, right before Corona hit. And then a lot of the guys I had here, they're young guys doing the stuff I'm talking about. They're doing other stuff in life now. So this stuff works though. It's how I got myself started, you know? And you get to a point where I don't want to say you don't have to do it, but I do it, that exact technique I just told you, as far as like making this list and then going and targeting that list, every day. I do it less now, but that's because I am still doing so much to where people are calling me. But again, if I stopped completely, nobody's calling me anymore. It's just not happening, you know? So I'll send you guys that so that you could, send it to your team and you'll see what it is. It's a good list. You can organize it and do it. That's you use that in conjunction with planting seeds on social media and in networking events. It's kind of how you develop this list, okay? So again, I'm saying networking event, a barbecue is a networking event. That's how I look at it. The same way you were looking at it in high school, you're gonna go to a barbecue and go talk to a girl, you're gonna go to a barbecue, you're gonna go get yourself a deal. That's how I look at everything now. I compare all of it to how good are you at approaching a girl and getting a group comfortable to speak with you. It's just like getting someone comfortable to do business with you. It's the same exact thing. There's nothing different about it. Nothing different about it. In my mind, it's easier. It's easier in my mind, So that's that. Did I answer your question for, do you want to go, you guys want to go deeper down there or no?
You were saying 70,000 a year for 200,000.
Yeah, if anything, they can afford more, but if they're being budgeted, yeah, 200,000.
You don't think we should think more because people always got those other obligations like cars and student loans? We should shoot for people that bring home.
Well, that's what I'm saying. 70,000. We could approve someone on a $400,000 mortgage if they make 70,000 a year and they have a car payment, normal credit, etc. What I'm saying is, people who have career jobs, for the most part, they're already mentally budgeting themselves, saying so to where even if I told them they could afford a $400,000 home on a mortgage, I could approve them. They're going to come back and say, yeah, but that payment is $4,000 or $3,000 a month. What could I afford at $2,000 a month? And that's going to take them to $200,000. The number I gave is already going deeper into what you just said. They could afford more, but they're going to budget themselves down to $200,000 as they should. Because if they buy $400,000, they're not going to have no money left. Yeah. So that's what it is. The $120,000 person a year, they could afford, a 600. I could approve them for a $600,000 mortgage. They're going to take themselves down to 400, 500. Yep. So 70,000. Look, the sky's the limit. Shoot for the highest income categories you could get, but you got to start somewhere. I work with clients that are making $70,000 a year all the time because usually it comes with a couple. They're going to buy a $300,000 home because they're both making that money. It's only when it's one of them are making that money where they're going to stay down to the 200. But a lot of times today, for the most part, you have the husband and the wife or the soon-to-be married couple, both working career jobs. They're out there. They're all over the place, And you combine their income, they're sitting down together saying, we want a $300,000 home, So that's where you come in. Hey, let's go start looking at what $300,000 home look like because you guys think $300,000 might be all this or not this. Let's go start taking a look at some. In the meantime, you're going to talk to Laurel. You're going to talk to Connect Loans. They're going to start showing you what payments are going to look like. And let's figure out where we're really going to be at. Does that mean we're going to go up above $300,000? Are you eventually going to say, nope, we got to come down. It's too much. We got to get people moving. We got to get people moving because people assume too much about what they think they could afford, what they can't afford, what they're going to get out of a $300,000 home. I like to get people moving, to get the momentum moving so that they decide, I'm not a buyer this year. I'm going to wait. Or, I see what this is. I'm getting excited now. Let me give you more documentation. Let's get going, So that's what I do. I'll say one more thing with this. And this is in regards to leads or just in general networking. Someone calls you, says, hey, I want to go look at this house over here. They're not approved yet or nothing. You never even met the person. You're like, am I going to waste my time? So many agents say, I'm not even going to go show you a home unless you have an approval. That's logical. It makes sense. But I don't think you should do that. Not in your initial meeting. I think you should go show them the home. Just like if you're going to meet with them at your office or at a coffee shop, use the showing of the home as your meeting. Size them up during the meeting. Go show them the home. They said they want to go buy a $500,000 home and you're like, this guy can't afford that. Go show them the home. You might learn otherwise. Or is it going to be more? Is it going to be less? Either way, you got the meeting, and now you know what the person is going to be able to do. At least you have an idea. And that's your meeting. They said, you know what? I talked to 3 other agents, and none of them said they'll even see me unless I had a pre-approval. Go meet with the person. Get the meeting. Go show them one set. Now, once you get to the 3rd time they want to go look at homes, no, you need to have an approval at that point, because now you could be wasting your time. But to use it as your meeting, you're not wasting your time. You're going to meet with them anyways. And if you keep telling people, I don't even want to meet with you unless you have a pre-approval, you're not going to get clients. You're not going to get clients. You got to get people moving. You got to get them walking to the point where they start running to closing, you know? So when I hear agents say they won't even meet with you or won't even show a home, okay, if you've already showed them 3 different days of homes and they're not getting approved yet, I understand. But what the hell? Get the meeting out of the way, figure out the client, figure out if you're going to work with them, and decide yes or no. Don't just shut it down. Don't just shut it down, you know? So that's my take on that. Just like how we take an application. If someone's calling you to go look at an expensive home, I would look at that. And if I'm a realtor, I'm saying that's my application. My meeting with them is my application. That's my form of an application as a realtor. Let me size them up. Let me see what we're going to do. Let's see what's going to happen out here, you know? So that's that. I'm going to go back up a little bit here, unless you guys want to add anything to that. Going once, going twice. We're at 7:20. We got 20 more minutes in this 1 hour. So let's see what I want to focus on here. I'm going to make sure I touch on the 1% down conventional program. But I'm going to ask you guys a question. This question is going to be for Jalen. When I say AUS, DU, LPA, Fannie Mae, Freddie Mac underwriting, are you familiar with what I'm talking about? Have you seen one of the actual Fannie Mae actual approvals? Or no, not a pre-approval, an approval from Fannie Mae. Have you seen one? Okay. Are you familiar or have you been involved in a deal where you had a buyer where it came with a mortgage, not appraisal guarantee, but no appraisal requirement at all? Like you didn't need an appraisal. The lender didn't require an appraisal. Have you been in one of those? Okay. Has anyone? Okay. So I'm about to go over 2 things with you guys. One, you're lucky enough to have a conventional borrower that is willing to put 20% down, and you'll know because when we're approving them, we're going to tell you they're putting 20% down. We're giving you an approval where they're going to go shopping for a home where they want to put 20% down. You are able to get an appraisal waiver. And I'm going to show you what that looks like real quick.
That to get around, I know 20% down, they don't require the mortgage insurance.
Correct. So this is a Freddie Mac approval, okay? First, I'm going to talk about what this is. I was saying, underwriting, people say, hey, you're pre-approved, you're FHA approved, you're conventional approved. Technically, the LO should already have this. Now, we're sending you a pre-approval letter with our company brand, right? And it's an approval. It's supposed to mean we have one of these from Fannie Mae or Freddie Mac or FHA. Unfortunately, if you've ever been involved in a deal where they said they're approved and then didn't close because they weren't qualified, it's because they didn't actually do underwriting. They didn't actually underwrite the deal up front. They just said, credit is good. They said their income is good. Here's an approval. Have a nice day. They didn't do the real work. That is a waste of time. We don't do that. Any approval that comes out of our company is a certified underwriting loan approval, meaning we already acted like we're closing tomorrow. We already took the buyer through the process. You're going to need this much money. Now, it's not hypothetical. It's what it's going to be. Boom, boom, boom. They say yes, then we issue an approval. Now, if your client is putting 20% down, we run it based off the property, appraisal waiver. I have to check it based off the fact that they're conventional, the fact that they're putting 20% down. Fannie Mae, Freddie Mac pick up appraisal data in the area. If the offer amount we're making is relative to the purchase price and the buyer has good credit and putting 20% down, they'll tell us you don't need an appraisal or not. How powerful is it if we make that offer coming in with an appraisal waiver saying, hey, seller, it's not a guarantee. You don't even need an appraisal. You're all set. You're only going to be able to get that with a conventional 20% down. Even in high income scenarios, not everyone puts 20% down. A lot of people want to keep their money in their pocket. But you'll know when you have a client, you'll know when to keep your mind open for it, keep your eyes open for it, because we're going to tell you, our pre-approval, this guy is actually putting 20% down. Keep your eyes open. Make sure you call us before you make an offer. We're going to check if we got this, because if we get this, you want the offer to go in with that. You don't want the offer to go in without that if we're able to get it. It's pretty much a guaranteed accepted offer. I got 2 offers accepted last weekend, both 20% down appraisal waivers. One guy who sold his house, he's putting more than 20% down, so he has a lot of money from the sale. The other guy is my old boss. I used to work at Ramada Inn before cell phones. He's putting 20% down. He's buying a home in Farmington. And appraisal waivers of both of them, both offers accepted. We couldn't get stupid with the offer. We couldn't go like below asking, but we gave them what they want with a waiver. We're going to beat everyone else who doesn't do that.
What's your closing time frame? Still 4 weeks?
We average 17 days. Average, because we do this up front. Like by the time you're helping them buy a home, shop for a home, we already have everything. So at that point, it's get the deal submitted, offer accepted, submitted, title, insurance, homeowner's insurance is what I mean, appraisal if one is required, we go to closing. If someone is a gifter, let's get the gift out of the way, we go to closing. Our closings, the money's already at closing the day before closing. Like we have our clients wire the money, do all of it. We don't make them do it the day of. I don't want my clients running around the day of closing, trying to figure out timing, schedule. I'm like, no, the money's already there. Just go to closing. They get a little money back because we don't know the exact number, so we have them send a little extra so they get money back. Closing we have tomorrow's closing over here at 4. They're getting $800 back because I had the dad do a gift. I'm like, I don't know how much it is yet. We had him do the gift a week ago. I'm like, just send $15,500. It's not going to be more than that. They're getting $800 back tomorrow. They feel good about it, even though it's their own money already. It's just like when you find $20 in your jeans. Find $20 in my jeans. So this is what's supposed to be happening in the background. Any loan officer who's actually stands by their approvals does this. They do it. Most don't though, unfortunately. I don't want to talk crap about people, but I'm just telling you the truth. Most don't. So when you're lucky enough to have that buyer, which again, you'll know about it because we're sending the pre-approval out, you'll know to look out for this. So now going back to the scenario of when you had a deal, could someone give me one story? You had a deal that was approved, then the mortgage company called and said, we can't close anymore. Give me one story, just anybody. After you already got an offer accepted, not like while shopping, like offers already accepted. Go ahead.
This is around Christmas time. I was working with another newer agent on our team. We had the pre-approval. We was going back and forth. Got the offer accepted. And what did the loan officer do? He messed up their job. Their job is the time when they was on the job.
Yeah.
Elongated. And then they made it go where it wasn't in the range.
Yeah.
They needed. She wasn't approving.
Got it. Okay. Anyone got another story? One more? Jalen, I know you got at least a few.
Yeah, story. You saying?
Just give me one that stands out.
So I only the loan officers' quality it increased. I only deal with loan officers prior that's up to your standard now. So it don't happen to me a lot. It just happened to us last week because they didn't verify credit, Chris. Yeah. Credit was like right below the qualifying score.
Yeah. So they basically issued. So what makes someone good at it? I'm just going to be real. Because I learned by sending out approvals that were not approved. And I'm thinking I'm going to close my own deals. I'm about to make money. Long time ago, a younger Terry. Just to get denied, I don't want to. This is what I always tell people. I care about the family. I want the family to buy the home. But I care about your time. But whose time do I care about most? Whose money do I care about most? And I would believe you do too. Your own money, your own time. So if I'm saying I'm going to protect my time and make sure I'm making money, you better believe that if I'm sending the approval out, your time is safe. Because I'm not going to waste my time. I learned by making the mistake over a decade ago, making the mistake too many times of not making money when I was supposed to make money, not getting the family the home when I was supposed to get them the home. I learned how to stop that. If we close, people don't believe when I say this, so I say 90% now because people don't believe when I say 100%. Laurel's been here for 2 years. Laurel, do we not close? You tell me, do we close 100% of what we submit with offers accepted or no? What we submit, because we deny it ourselves if it doesn't work. We don't ever let it go to our lenders because we know we do this ourselves. So if it's not working out here, we help the borrower. Let's get to the point where it works out. Once it works out, then you're approved. Now, will there be a one-off situation here and there? Yeah, but we normally catch it before it gets to that point. Like, we normally will catch it before it gets far in the deal. Like, I've never had a client, the last time I had a client lose their deposit, 2014. Last time I've had it happen. Last time. So,
We never had a client lose.
thank God. It sucks. So you don't have to be in that situation. So, with all that being said, you could rest confident that any approval coming from us is it's not just a pre-approval, it's a certified approval. We did all this work up front. We have their documents. And if there's anything trailing that we need, you're going to know. Hey, just so you know, They still didn't send us 1, 2, 3, and I need them to take care of 1, 2, 3. Otherwise, the deal's not going to work out. But we're far enough. I'm comfortable enough to send out the approval as long as you're aware this is what's left. Once a week when you're showing them home, just be like, hey, did you get Terry and Laurel what they need? Yeah, I did. Cool. Hey, did you get Terry and Laurel what they need? No, man, I didn't. Hey, please get them what they need. You're going to need it to close their loan. That's all. We don't need you guys to figure out what it is, explain it to them. Just remind them. Terry told me you're still waiting on documents from you. Please get it to him. That's it. And we will let you know when that's the case. That's it. So that's that. That's in regards to our approval. I want to show you guys a quick video in regards to that.
Well, Terry's pulling that up. Speaking of Deanna, our first deal with that, she was on with us, that Georgia deal, it was like a 580 purchase. Everything was perfect. He sent us all his docs within the first hour. Like, income was good. I pull his credit, the guy's in the fives. I'm like, okay, we got some work here, We didn't have to send anything to the lender. We just underwrote it ourselves. Like, listen, you got to pay off this, and this. I need a letter showing that you paid off this, and this. And then we closed it after, 3 months? He followed every step we told him to do.
It was a total of 2 months. So it came to us with an accepted offer. So we're not complaining. We never talked to the client at all. We got a $600,000 accepted offer. Okay, thank you. Thank you, Georgia Realtor. We'll take it. Credit was horrible. The deal cannot close. Even FHA cannot close unless we take care of all this stuff. It took 30 days. We helped him. We blueprinted it for him. You got to take care of 1, 2, 3, 4, 5. Otherwise, you can't close. The moment we saw that, I called our agent, the one that she met from the cold calls. I called the listing agent and Deanna. Hey, here's what we got to do. The deal's not closing on time. I hate to be the bearer of bad news, but we just saw the deal for the first time now. It's going to take this much time. It's going to take a good 3 weeks for us to even fix his credit. So we're going to need more time. Is that okay? Thank God they gave us more time. The deal closed 30 days after we fixed his credit, but the total time was 2 months because it took him 30 days alone just to fix his credit. So 30 days to fix his credit, then we submitted the deal to the lender. The lender never saw his shit-ass credit. They only saw good enough credit. They never saw what we saw. We got it all updated for him, and we got it done. Coincidentally, that agent, the 2 other deals we closed with him, we also didn't pre-approve. He came to us with accepted offers. It's a very unique agent. It's a very unique agent. He came to us, they're all high deals, and they come to us with, he's coming to us saying, here's an accepted offer, close it. We're like, okay, I hope they're approved. Thank God the other 2 were approved without any challenges. But that was rare. That's like the opposite. I don't advise that you guys do that because this guy, you saw what he ran into on his first deal. The guy came in with a horrible credit. The deal could have, if we weren't on the deal wasn't going to close. So this, I want to show you what it has to do with what we promise. Our certified approvals, we have a promise that we give out to all of our clients. This is us to you guys as our business, business to business. Our insurance agents is business to business. Internally, my staff, them to me, the Connect promise. Quality, transparency, and speed. Quality meaning whatever we do, we're gonna do it the right way, the best way. Transparency meaning good news or bad news, you're gonna know about it. We're gonna rip off the Band-Aid, and we're gonna make decisions and move on. Speed, we're gonna go fast. So if you're gonna be denied, we're gonna deny you fast. If you're gonna be approved, we're gonna approve you fast. Once an offer gets accepted, we're gonna close fast. And if the deal requires more time, like the deal we just gave an example of, transparency, everyone's gonna know about it. No one's gonna find out we need 20 more days when we're trying to close. You're gonna know we need 20 more days right when the deal starts. You're gonna know right away. So this video pretty much says that. Let's go ahead. I want you guys to notice something. What I just told you guys verbally pretty much was verbatim on that video. The video didn't come first. I've been preaching what I just preached forever. Video came well after. Figure out your quality metrics that you want to promote to people. What are your metrics? Whether it's something specific about you or a standard of business that you're gonna be delivering. Get your own script down. I don't like to call it a script, but get your own script down. Get your own thing about yourself down on what you're gonna be delivering and have it here where you can say it on demand. Where right here, when I was talking, I wasn't speaking off a script. That was coming out of me raw. Get your stuff down to the point, what message you're delivering to people raw so that when it comes out authentic, So that is a promise that we have to all of ours. We got like 10 more minutes. And as far as the 1 hour goes, so I'll leave it open to you guys. Any topics you guys want to cover, the 1% down we'll cover, but is there anything else someone want to say before we get into the 1% down?
So I think everybody on my team, we all work too hard. So what I mean by that is we throw a big fish net out there with pretty much buyers. We do all advertise high price product. We all get expensive listing on the team. Everybody markets that. But my thing is we probably each do about 3 to 4 different consultations a day. Somebody they sound like they got it all, but when they speak to the loan officer, they're not qualified. I think DTI is what kills us the most, and credit score. We usually hardly ever talk to somebody that doesn't have a job. Doesn't have a job making 6 figures or less a year. But a lot of times it's credit and it's DTI. What advice do you have for us?
If you guys are getting those 3 to 4 consultations a day, and a good average of them are high income like that, I don't think you're doing anything wrong. You just got to be working with, his LO may not be the LO that meshes well with you, or may not have the time if he's a busy LO to be able to deliver to you the level of quality that maybe he's delivering to him. The LO, if the LO is doing a great job, he's not going to be able to, I'm going to use me as an example. Somebody's debt ratio doesn't qualify. I'm not going to magically make his debt ratio qualify. However, there are guidelines. There are things that we know where we could get him to qualify where maybe the other professional wasn't aware of. A lawyer, I've been called the lawyer of mortgages because I know I could whip out the guideline and say, I know how to qualify your deal. We didn't do anything. I just know what's possible and what's not possible. I'm using my expertise, my knowledge, and knowledge is power. So I want to take, the next time you have that where like everything seems good and it's like, whoa, and debt ratio, I want to take a crack at it. Like with whoever it is that denied it, said, no, the debt ratio doesn't work, I want to take a crack at it. We've been fortunate enough to know the guidelines, to be able to find a way to get a deal done and or be willing to work with the client. The amount of people that are willing to work with the example she just gave us, you know how much follow-up it required? It took so much time for 3 weeks straight and anxiety, knowing there's a deal out here, everyone depending on us to close, to get this guy to get the stuff paid off, to get the letters from the creditor we need to get him to a point of approved. So that guy could have been one of the people that he said, hey, it's not going to work out. But if it was with us and there's a way to get it done and the deal is valuable to us, we're going to make money, right? It's a large enough deal, we're going to make money. We're going to work at it. We're going to present the solution and the buyer's going to tell us they're either down with the solution or they're not. If they're down with the solution, what I always say is if the buyer's willing to play ball, we're going to play ball with you. If you're not willing to play ball with the solution, then I can't help you. It is what it is. Case closed. A lot of people are not even presenting solutions because they think the solution is too outrageous. We present a solution. Don't say no for the client. Let the client decide it's too outrageous to do. So one is there is being able to work with the client to get them to an approved status. We don't need them approved right now. We need to know they're not approved now. Transparency, rip off the Band-Aid. Can we get you to approved status? It takes 1, 2, 3, 4, 5. Yes, we're gonna help you do it. If they say no, we can't help them, right? So that's that. 1, 2, sometimes it's just knowledge. We know the guideline, we know the loophole. There's a lawyer in a case that might be able to get you the lawsuit won versus the lawyer in the case who doesn't win it. It's a combination of how they speak and more importantly, their knowledge. Their knowledge, there's a loophole. There's a part here in the law that I know I can use that when I present it to the judge and to this person and that person, they're gonna be like, oh, okay, we could get it done. We teach underwriters at the lender stuff once a month. They're like, oh, I didn't know you could do that. I'm like, here's the guideline for Freddie Mac themselves. We pull up the handbook like it's a law. So that's that. The 1% down, there is what is the traditional minimum down payment? One more time. 0%. For veterans, you could do 0% if they're qualified. 3%. Then there's 3.5%, that's 3% conventional, 5% conventional. Those are the two traditional minimums. Then there is 3.5% FHA, everyone knows that one. 0% VA. Obviously there's down payment assistance. This 1% down is a conventional loan where it's really 3%. It's really the 3% down loan. If you qualify for it, you as the buyer, you only need to put 1%. Our lender puts the other 2%. So it's really a 97% loan, right? 3% down. And if you qualify for it, we only need you to put 1% down. What else is great about it? There's no PMI. It's a conventional product, 1% down, no PMI. What do you need to qualify? Every zip code has an AMI, annual median income. You guys don't really need to look it up every time. Just know The average is 80,000. What's 80% of 96? It's about like 75,000, 76,000 as the average. If someone, what they're looking for, we could qualify them with less than $76,000 a year income, call it less than 80,000, we could get them this deal. And most people make just around that number. Just around that number.
I think I heard it is somebody approved today for 125. I think they were telling me something like that. They said that 1%. They said it just depends on where the house is at, and I had to look it up on I think it's Freddie Mac's website.
Mm-hmm.
Yeah, look it up on
The FFIEC.gov.
Yeah, look it up.
There's a Fannie Mae version, a Freddie Mac version. At the end of the day, it's pulling up the AMI. It's usually, it's increased every year for like the last 6 years, the average AMI, because everyone's income has been going up a little bit with inflation. It's around 96,000 to 100,000 is the actual annual median income for a household, and they take 80% of that, which is about 75, 76, 77,000. Most areas in Michigan, it's right, I call it under 80,000, even though it's really like 75, 76,000. Now, let's say it's a husband and wife, they're applying together. Together, they're 120, they're above it. But the wife qualifies by herself and her income is under the limit. We could use just her and call it a day. We could get her the 1% down. We don't need to put both of them on the loan. They could both be on the deed. They both want to be on the deed, right? You don't need both of you on the mortgage. It's pointless. When one person qualifies, unless the couple is insisting that they both be on the loan, we don't put both of them on the loan. Like leave the other person's name free so you qualify for something else. If you want any other type of loan in your life, the other spouse could qualify for it, you know? So let's say someone makes 120 a year, but 70,000 is salary and the other 30 or 50 is bonus or commission, and they qualify with just a 70, I could use just a 70 and call it a day. I don't need to use this bonus. So this is why I'm going back to what I'm saying. Like that ratios, yeah, I get it, but we know things. We know what could be tweaked, what can't be tweaked, and the loopholes to get around it. What I just told you guys, it's a pure loophole. Person really makes 120, but I only have to count this. The guideline allows me to do that, so I'm gonna do it. The guideline allows it. It's a loophole. Should it be a loophole? No, but it's a loophole. It's allowed. So we're going to take advantage of it. The person technically is above the limit, but I could do the deal where the only counting is just the income I need, just the salary, or just the base pay, etc. So that's the 1% down. Now, for full transparency, what I told Jalen and Deanna on the phone, we don't target deals under 150. Our target, I told you, is like really 350 and above. We do a ton of $200,000 deals, $150,000 deals, and a lot of large deals. Our average for our office, when you figure all the large and small, our average is $330,000. This is our average, okay? I'm not saying we'll never do a deal less than 150 or even like a $50,000 deal, but we don't want to take those applications. When do I want to do it? We've been doing business together. You're sending your deals to Laurel. We know we're doing good deals. And again, you have your friend, your family member that you care about. You're like, they're going to be clean. They're going to be good to go. Just knock it out of the park for them, please. We'll do it. We don't want to target applications, new deals, and make our life about deals that are about to lose us money. We're not going to do that, you know? So that is our target. And I encourage everyone in this business to really just go after the deals that are going to make the money. Just because you close deals doesn't mean you're making money. If you fill up your pipeline with, I hate to say it, it's just true. If you fill up your pipeline with under $150,000 deals, this business is not going to be what you thought it was going to be. It's not going to make the money that this business has potential. And this isn't Connect Mortgage charity. It's Connect Mortgage funding. You know, your real estate office is not charity. You want to make money at the end of the day, you know? So reserve the deals that you're not going to make money on for when you want to do it because you care about said person or the person is coming from someone you truly care about, you know? Cool. But I learned this lesson the hard way, guys. I was doing it, and I'm like, what's happening? What's happening right now? My bank account was not, I'm closing the deals. I should be making money. It's not my boss's fault. He's paying me when I'm supposed to get paid. I'm like, it's me. I'm focusing on deals that are making but my boss is not making money off these deals. When you pay everyone on it, on the mortgage side, $100,000, we break even. We break even. We don't lose. Under 100 is pure loss. Pure loss. Just by us operating the deal. It's a little different for you guys, but there's so much upside on just targeting your time to go after the deals that are going to make you money, you know? It's still a lot. There you go. So, yeah, because you're paying a large commission to the realtor. The realtor makes a large commission. Yeah, 100%. So that's my advice to everybody. This idea of just taking on any deal, you shouldn't. You should only take on deals to get experience. Once you got the experience, you don't need to take on any deal. You don't. And I'm not being cocky or trying to whatever. We're past where we need the experience on the small deals. We do it purely out of when we want to, and for no other reason. So that's my only ask. We're gonna knock these deals out of the park for you guys. We're gonna save you time. If we come to you and say it's denied, we'll tell you if there's an option to get it done elsewhere. But if we tell you it's denied, there's a 9 out of 10, there's a 99% chance it can't close elsewhere. And we always tell the client, here's what you need to do. And we're gonna tell you, they said they're not gonna do it, or they are. If they said they're not gonna do it, there's no deal for this guy for another year. Don't call him until next year. You're done with that person. I don't care who the person is. The person could be your brother. If your brother says, I'm not gonna do what I need to qualify, all right, brother, we'll talk next year about buying a home. I can't help you. I'm gonna go talk to another real estate agent. Great. That real estate agent is gonna waste their time. Like, who cares? Like that's how I look at it, Know who it is that is going to close and who isn't. That's that from me. You guys want to add anything else?
What's your credit score you want to see with clientele? It really don't matter about the credit. It matters about income, assets, DTI.
That I'm willing to play balls more than anything. The example she gave, the guy had a 500 credit. But the guy also made $140,000 a year. So he wasn't just willing to play ball. He was able to play ball. Able. And we presented the solution that nobody would have done. And we put the fire behind it to help him do it. And we got it done. So now, in general, conventional, you can't go below 620. You get into FHA territory. Really, when you're below 700, you start doing FHA no matter what. Just because it's that much of a better deal, even though they could do conventional. FHA technically goes as low as 500, but in reality, once you hit below 580, you're done. It's just so hard to get done. We have to work with them to get them above 580. So let's act like you guys just got a deal. And again, you could tell, right? We all size people up when we're speaking to each other, when we're out there in the world. You could tell. It's by having a 30-minute conversation. You know what? The person seems like they're a person that's serious about what they talk about, serious about their word. I believe the person when he says he does this. I believe the person when they say they make around this much money. Cool. If they're telling you they have bad credit and you know the person is someone who's going to play ball, and you know they're going to be a valuable client, no, we'll help them. We'll help them. Again, it's only the below value that we do. It's a waste of our time. So we do this type of stuff a lot. There is, I'll give one story of an example of when I did a small deal. It's a realtor that I did a ton of deals with, a guy named Jason Dabish from West Bloomfield, realtor. We closed a ton of deals. Almost every deal me and him close, it's making this company $8,000, $9,000, $10,000 in revenue, okay? At least. He came to me one time and said, hey, I have a deal. I'm the listing agent. It's a $50,000 sale. I did it from someone. She was a customer of my dad at his party store. I just wanted to do it for her, and the deal's falling apart. Take a look at it. Could you help me? I know it's not going to make, told me. I know you don't want it. I know it's not, but can you help me? I'm like, let me take a look at it. We did it. We closed it for them. Why was I willing to do it, though? Why did it not bother me at all? I'm already making money with the guy. Exactly. I'm already making money with the guy. It's not, our relationship isn't based off those small deals. Our relationship is based off, we know we like each other in business because we've been making money together. So I'll do it in that case, but I haven't gotten a small deal since from it. That was like 3 years ago. So that's what I'm saying, reserve it. And for yourselves, tell yourself mentally, unless it's experience, reserve it. I do look at those small deals like I'm actually doing like pro bono. That's my pro bono deal for the year. And I'm not trying to make it sound that way, but that's how I need to look at it to protect to protect myself from, because when I get into a deal, you could ask them to. Once we decide to take on a deal, guys, we're gonna work at it like it's $1 million deal regardless. So I'm just protecting my time because I know how we work on deals. I put my whole team on it, like it's $1 million deal, whether it is or isn't. So I don't want to do that. I don't want to do that for no reason, So that's my take on that. Credit scores, again, if you think they have the means and they're gonna play ball, we'll help them. We'll help them get it better done than anybody else. Better than anybody else. It's the playing ball and the means that those two things need to be there.